Welcome back to the Dividend Diplomats YouTube channel. You know you're riding with your boys, Bert and Lanny, the DD, the best dividend investors out here on YouTube, guys. And we've got two dividend stocks, a nice dividend battle royale, brother. And we're going to put them toe-to-toe in the ring to see if there's a better stock to buy between the two.
All right, everyone. You know what to do before we get involved with that, though. Smash that subscribe button. Give us that big old-fashioned thumbs up. We are so close to 15,000 subscribers, everybody. So please help us out here. Help your boys. Let's do it. Let's crush it.
Guys, we're talking about two dividend stocks. We had a few comments over on the last few videos, really looking at an industry that we rarely touch directly. And Bert, I don't think you own any stocks in this industry.
No, indirectly I do, but I'll get into that after you disclose what industry we are talking about.
Right. I don't own these two stocks. You know, we're going to put them through the Diplomat stock screener, which, as we all know, focuses on those three metrics: price to earnings ratio, dividend payout ratio, history of growing a dividend, as well as a dividend yield statistic here, which is how much these dividend stocks can pay you if you own them.
That's right. So, I mean, this will be fun. It's always, we talked about in our previous watch list, a lot of them have been about adding to our current positions and just nibbling and getting small pieces into what we already own. That's why this analysis is going to be so much fun. Not only are we looking at two potentially new stocks for our portfolio, we're looking at an entirely new sector for our portfolio. So that's what's going to be exciting here.
You know, and the other interesting part is these aren't small companies by any means. These aren't going to be no-namers, but they're definitely no-namers in the dividend investing community, to be honest. What's your take on that?
No, I agree. I was going to joke and say there are no-namers in the Dividend Diplomats portfolios, which are linked below in the description. If you want to see all the stocks we own, go check it out down there.
For free, fully transparent. We're bringing you guys our dividend stock portfolios that we update on a very frequent basis.
Yeah, you're right, Lanny. So let's do the big reveal here, Lanny. Let's do the big reveal.
It's Kane. It's Kane.
Ray, we're going to take off Rey Mysterio's mask finally. And like, oh my gosh, it's another mask underneath there.
Guys, we are talking about the automotive industry, not Ford, not General Motors. No, we're talking about Toyota and Honda, two of the biggest beasts in the automotive industry. Obviously, you can't knock the quality that you get with riding in one of those cars, right, Bert?
That's right. And I think for this analysis, it's appropriate. I drive a Camry. I'm going to take Toyota in this analysis. Lanny.
You know, I'm riding right now with Honda, so I've got my nice Honda Accord. So it's going to be a very interesting dividend stock battle here. Now, listen up, Jack.
Well, we got to say one thing too first before we go into here, Lanny.
What's that?
We're going to talk about both of our first cars in here, and that's the fun part of this. Both of our first cars are covered in this. My first car was a 92 Toyota Tercel that was teal, and the car that Lanny was still driving when I met him in 2012 was a
1999 Toyota Celica. She's a beaut.
That's right. So, all right, let's jump in. The prices in this analysis are going to be as of September 6th. So everybody keep that in mind. Those are the closed prices for this video. Toyota, let's kick this off, closed at $143.94. Their forward EPS is a blistering $9.25. PE ratio is 15.56.
That ticker symbol for Toyota is TM. Bert, you know, 15.56, definitely below the stock market on average. But let's dive into that second metric, that dividend payout ratio. Is Toyota stock pay a safe dividend here? Well, at an expected earnings of $9.25. Again, they're an international based in, in Asia. So very hard to estimate here with the exchange rates, but based on plenty of websites that we've been able to check, Toyota pays, as you'll see here, similar to Honda when we dive into them, they pay 2 times a year. In total, the dividend's $4.30. So earnings expectations are over 9. $4.30 dividend. That's a 46% dividend payout ratio.
They're new to the dividend growth game. They have increased that dividend for 4 consecutive years based on what we are seeing. I gotta start somewhere. Their 5-year average dividend growth rate is 4.07%.
Now, do they make it up in the yield with the 4% dividend growth rate? Dividend yield at the time of the recording here is a 3% for Toyota. Ticker symbol again is TM. So the stock's been down 22% this year. Obviously, the automotive industry is still dealing with higher, material cost with inflation, as well as supply chain issues that has been pent up ever since the pandemic started. And they're in the heart of a lot of lockdowns over there in Asia as well.
So after moving out of the dividend stock screener, we made it through the metrics. You saw those. Let's move over to the balance sheet quickly. When we find stocks we like to look at the current ratio and the quick ratio just to get a quick gut check on how liquid the company is and can they pay their short-term liabilities. Current ratio was 1.1x. You divide current assets by current liabilities. That's a check because it's above the 1 mark that we like. Means, hey, their assets cover their short-term liabilities. Quick ratio, same thing, just back out the inventory. So current assets minus inventory divided by current liabilities. That's 0.92x, just a hair below 1x, but it's pretty good from what we typically like to see when looking at that metric.
Pretty good with a heavy inventory type of company, as well as from a highly, I think capital intensive industry. So being that liquid as Toyota is really no shock there based on, their lean and Six Sigma, high quality control that they have. It's no wonder that they're also keeping control of that balance sheet. So no real pretty positive signs on Toyota stock's balance sheet right now.
Amen. Let's just run some quick income statement metrics. Revenue's up 7%. Net income is down 18%. That matches what you said earlier when you were talking about the stock price. Some of the issues that they are dealing with. It's interesting. You see the top line, but the real costs are coming in. You're seeing a lot of some of those issues in between revenue and net income start to present themselves. So
yeah, no company's really having issues with revenue right now. I think it's more of managing that cost.
Yeah, look how much the cost for a car has gone up. I don't think any of these places are going to be that concerned about revenue.
And you know what? Let us know in the comments who here owns, a Toyota or a Honda. Let us know right now in the comments. Obviously, you've got 2 diplomats here that own both. To summarize here, though, guys, a 15 PE ratio, 46% payout ratio, a history of dividend growth for Toyota at over 4% with a 3% dividend yield, guys. But now, brothers, it's time to dive into the Honda motor cars. Ticker symbol is HMC. Bert, you want to kick us off here with the dividend metrics on Honda stock?
Price $25.57, EPS $3.46. That's a PE ratio of 7.39.
Now, guys, you'll see the images during this video of the earnings estimates. It's hard to get the estimates. We went through 3 different sources. We did use a couple metrics from Seeking Alpha, which we don't historically do, but Yahoo does not report them. A few other websites do, and they're pretty much around there as well.
Payout ratio, let's look at that second metric. Dividend 98 cents-ish with the conversion and the translation. Divide that by the 346, that's a payout ratio of 28.32%.
Guys, similarly to Toyota, they pay it out twice a year. It's almost about 50 cents per share every 6 months. Not to say it's all over the place, but a pretty safe dividend payout ratio, wouldn't you say, Bert?
I would agree. I would very much agree. Let's look at their dividend growth metrics. They've increased that dividend for 1 year. 5-year dividend growth rate, 3.31%. So interestingly, compared to Toyota, looking a little bit worse on the dividend growth perspective. Remember, Toyota, 5-year dividend growth rate, 4.07%. Honda, 3.31%. Toyota's increased for 4 years. Honda's increased for 1.
Again, pretty hard to gauge just because, it's a very interesting stock history. We'll actually flash the dividend history of Honda just to show you can see the chart. It's kind of, a little bit weird and a little bit different, but based on purely dividend growth year over year, they're at 1.
Their yield, let's look at that yield. 3.83% for Honda. Nice little premium compared to Toyota's 2.99.
it's a premium right there. You definitely get almost 1% over Toyota stock, guys. This stock is also down 11% this year, not as much as Toyota. And I wonder how much more, meat there is left on the bone to drop on Honda stock, given the price to earnings ratio and the fact that they just haven't dropped down that much this year. To put in comparison, market capitalization wise, Honda is about 50 billion in market cap, and Toyota is pushing 235 billion in market cap. So Toyota definitely by market cap is a lot bigger right now than Honda, I didn't realize there was that big of a disparity based on market cap.
Yeah, I don't know. That's why it's fun putting these companies head to head and see how they hold up against each other. I'm going to rip through the other metrics we talked about here that we did for Toyota, because we already explained them and kind of what we look for. Current ratio 1.47, quick 1.14. Interesting that both of them are well above 1x versus Toyota that had the current ratio at 1.1, but the quick was below at 0.92.
Honda doing a little bit cleaner on the balance sheet, a little bit more liquid than Toyota, but hey, maybe that means, are they putting their current assets to use as well as Toyota? So there's always a give and take there, but obviously a very clean balance sheet. They can pay all their obligations one time over. Even if you take out the inventory, Honda stock seems pretty safe from a balance sheet standpoint. But for earnings is pretty similar here because they're down, right? And revenue, though, is also up. What are some of those metrics, my man?
Revenue's up 7%. Net income is down 31%. So
Ooh.
Similar. Each have their own reasons for why net income is down. Probably very similar reasons, just the dollar amounts are different, causing that the difference in the percent. Same trend though.
Yeah, so guys, Honda stock right now, 7 PE ratio, 28% payout ratio, a weird dividend history, we'll say. Above average dividend yield right now at 3.83% based on what we're analyzing. If you guys find some differences, though, let us know in the comments with what you see on these stocks. For anything else to say about Toyota and Honda, how do you feel about them?
No, I mean, they're interesting companies. I've typically just avoided this sector. It's very cyclical. So it's just something I've never really wanted to add to my portfolio. I mentioned earlier, I have an offshoot of it. A long time ago, I bought Genuine Parts Company, ticker symbol JPC. They sell auto parts on the secondary market. I think they're a dividend king. They're an aristocrat or a king. I can't remember. I'm pretty sure they're a dividend king. That's how I like this sector. Not necessarily the taste for me, but it's always worth watching. Can't complain about some of these metrics. What are you thinking?
Toyota at one point, is trading above $210 per share. Again, ticker symbol's TM. So pretty interesting that they're down, again, $70 in share price on Toyota's side, from their actual 52-week high. Then when you dive in, into Honda stock, I pull that stock screen back up. At one point, this company was actually trading, roughly 20% higher than where they are. Not too significantly high. They're always in that $30 to $35 threshold. So I'm not sure on how big the upside is here with Honda. I agree with you. Historically, I'm on the sidelines because of how cyclical they are, as well as how many other, facets that they can face, especially given a pandemic, lockdowns, supplier costs, supply chain, chip shortages. Yeah, all these cars are running like a computer right now. So
yeah, regulations, you don't know what's happening with emission standards too. That's another key piece of this. That said, I think that kind of summarizes our feeling towards it. We've always been on the sidelines. We're not running into the field based on the results of this metric. So I think that's piece. There's nothing that we talked about with Toyota or Honda that's saying we need to get into these stocks right now.
Yeah, again, not that they're bad companies, they're great companies. Congrats if you're a stockholder or shareholder. I'm okay with being on the sidelines on, Toyota and Honda stock, but let us know in the comments if you guys own these stocks. Are you guys buying them? Again, not a really hot stock or a dividend stock that people are buying right now that we hear amongst the community. But if you're buying, please, by all means, let us know in the comments. Let us know other reasons why you like them or how long you've owned them, and give us a few reasons why you continue to hold.
Subscribe to our channel if you haven't already. Give us the thumbs up. Everybody, this is awesome. Keep letting us know what companies you want us to look at below.
Guys, that was Bertha Hurt and Laney from the Dividend Diplomats, over and out.